Hello, everyone. Welcome to this webinar that's focused on cash flow in the hospitality industry. I'll give it a minute for everybody to stream in. I thank you for joining us today. Okay. So hello, everybody. My name is Brian Van Hook. I'm Regional Director of the Small Business Development Center at FIU. You're here today joining us for this webinar that's called Finding Your Flow, Maintaining Cash Flow in the Hospitality Industry. If you're not hospitality or food business, it's okay because a lot of the same principles and concepts are going to apply to your business as well. So we don't feel like you have to leave the webinar. We'll give it another minute or so to start. But I would encourage you in the chat to please put in what your business is, like who are you? It would be helpful for me when I'm doing the presentation just to know about some of the industries that we're seeing and also just kind of who you are. So we want to make it interactive. So don't be shy. Feel free to put in the chat. Okay, guys. So we're going to go ahead and get started. My name is Brian Van Hook, as I mentioned. I'm the Regional Director of the Small Business Development Center at FIU. I'd like to welcome you to our 13th and final webinar in this Tasty Tuesday series that was focused on webinars to help entrepreneurs in the food and hospitality industry. I'm going to make this presentation really good, give you a lot of information, and also my colleague Jesus Padilla also will be putting in some information in the chat in case you missed any of the other 12 webinars that we've done. So a little bit about me first. As I mentioned, I'm the regional director of the Small Business Development Center here at FIU. Been with FIU since 2014. I've worked for about 20 years on small business economic development issues. That's my C-SPAN moment up there on in the slide. The Florida SBDC at FIU, we are your small business development center if you're based in Miami-Dade County or Monroe County. As I mentioned, we've been around since 2014, really focused on helping you to start and grow your business. If you're not in Miami-Dade or Monroe, that's okay because there are other SBDCs both around the state of Florida and around the country. This webinar is part of the BizGap program. BizGap is the Business Growth and Acceleration Program. And this is an initiative we run since 2016. It's focused on hyper-local consulting training and outreach to small businesses in targeted communities. We really want to meet you where you are in the community, whether that's, at your business, at a local community location, or in webinars like we're doing today. Also, we want to be a tool in the toolkit for local communities that want to help out their small business communities. And we'll just say shout out to the SBA and also to Congresswoman Salazar. This project is focused on Florida's Congressional District 27, which runs from downtown Miami, Little Havana, Coral Gables, over to Key Biscayne, all the way down to Palmetto Bay and Cutler Bay. And so we did receive funding from the SBA via Congresswoman Salazar's office. So we just want to shout them out for the support on this because we've been able to do a lot of really great work in District 27. The goal is to assist over 1,000 or more businesses in District 27. We're still working hard on the project through the end of the month. If you are registered with BizGap for trainings or for consulting, we're probably already helping you or already connecting you to other resources in the community as well. So don't worry, the program is ending at the end of the month, but we're still going to continue working with businesses under various programs. So don't worry about that. And then I just want to shout out a really great team of BizGap consultants. We have 7 great business specialists that have been working on this project, helping with everything from access to capital, to business growth, to marketing, to startup assistance. Also, would just shout out our wider SBDC at FIU team. That's the Miami-Dade group and also the Florida Keys group. Now let's get in the presentation. So I kind of gave you guys the background. I really want to thank you for being here for this presentation because you don't know how many businesses our center, other organizations like us see where they're really struggling with cash flow. So this is a very important webinar that's going to help you give you some tips to stay ahead on your cash flow, actually increase your cash flow, and better understand it so that you can have a really good, thriving business. Like I said, if you're not food or hospitality, that's okay. These concepts are still applicable to your business. So we're going to talk about what is cash flow, what are key concepts you need to know, what are tools to manage cash flow, different strategies, different innovations that you can have to maintain and increase your cash flow, and then additional resources that are out there. So, what is cash flow? According to the SBA, cash flow is the combination of money coming in to your business and money going out of your business. Specific to your operations, cash flow is the timing of cash flow, cash movements within your business. So, like that inflow and that outflow. Basically, if you're having expenses that are coming due that you have to pay, it's not helpful to you if you have cash that's coming into the business, but it's coming in a week later. So it's basically like cash that's coming in that you're able to utilize, and then cash going out to pay expenses and other things that you have. Really important distinction is don't confuse profit with cash flow. Profit or net income is the surplus. After all expenses are deducted from revenue, it's the basis on which tax is calculated. On the other hand, cash flow is the amount of available cash that's within a business at any given time as a result of the inflow and the outflow of money. So a lot of businesses basically assume because they have profit, they have cash flow, and that's not accurate. You basically do need to do a separate review of your cash flow to really get a handle on how your business is doing and the health of your business. And we actually talked about where net income is the measure of whether a company actually made money during a period. If you're using accrual accounting, net profit does not automatically mean that you have cash. Would really stress again that among organizations like SBDC, like SCORE, Women's Business Centers, like other programs that work with small businesses, cash flow is the number one reason that businesses fail. Um, Scenario number one is that you're basically starting the business, you're growing, you're not regularly tracking the cash flow, so you already have some bad habits built into your business, and your business is scaling up, and you're not tracking it, and basically your expenses are increasing. So basically, you're not able to keep up with your expenses because you're not tracking the cash flow. Additionally, we talked about profit and sales. Basically, many businesses overlook cash flow because they're assuming that their sales are really high, that things are doing good. But when those sales slow down, expenses come due, and they're not able to keep up with it. And so that's when they have another problem. So basically, kind of on a startup and scaling phase, and also just regular day-to-day operations phase. So it really is important to understand cash flow, like how the business goes around your business, how the cash goes around your business, and how you can basically do some things to increase it. So in terms of the business, there's some common terms that I want to discuss with you. Starting cash is the cash on hand at the start of the month. This is the same number as the previous month's ending balance. So if you're ending November, whatever the balance is when you end November is what you're starting with at the beginning of December. Cash in is the sources of cash that are coming into your business. That could be cash sales, paid receivables, interest, other cash receipts. Cash out could be two types. It could be fixed expenses, which are regular that you got to pay. They always say you got to pay taxes, you got to pay rent, you got like utilities. Those are things that are basically fixed expenses. You have to pay those every month. Variable expenses are things that could change month to month or could not be there from month to month. That could be advertising, promotion, services, supplies. Maybe you're doing like a holiday party or something like that. Those are things that could come up during the year, but they're not something that you have to pay regularly or like every month. Net cash flow is the amount of cash that has flowed through the business. This is a measure of change for that particular month. The ending balance, which we talked about, is how much cash is left at the end of the month. You basically determine that by looking at your beginning balance, plus or minus the net cash flow, and that gives you your ending balance. I have a couple of charts to show you kind of how the cash flow goes. So this kind of shows you cash in, cash out, how you're creating like your cash reserves. It's kind of agnostic whether it's services or products, but does show you basically where things are coming in. You're having customers, they're generating cash for you, then you're having cash come out, you're paying vendors. So it kind of shows how there's like a consistent flow within your business. This is the normal operating cycle, how basically the cash flow goes through your business. Basically, you have non-quick assets. You have basically quick assets. You have like your accounts receivable coming into your cash. You have temporary investments, um, basically your prepaid expenses, inventory. So this kind of shows how the normal operating cycle is related to those particular assets. Also kind of breaking it down by your different model. This has like a service provider model where you're basically looking at sales, paying any debts that you have, that comes whatever's left over is going into cash, going back into sales. Obviously, then you have on the manufacturer side, there's a few more moving pieces. If you have products, so basically, where you're basically getting suppliers, you're working on it, you're doing sales, you're paying your debts, then what's left over is coming to cash. So it kind of separates it by your business model. So now that we talked about kind of key terms, now that we talked about basic things you should know, kind of showed you how things flow, let's get into some of the rules and some of the tips. Rule number one is cash is the most important resource you have. We talked about that is lack of cash flow or impacts the cash flow is why businesses fail. Um, Having more cash, it's a no-brainer, is better than having less cash. Collecting your cash now is better than collecting that cash later. And then paying out cash later is better than paying it out now. So anytime you can defer, anytime you can, get more cash on hand, that's always a good thing. Also, we would recommend focusing on your cash flow and cash flow statements rather than looking at like operating statements like profit and loss. We did talk about how profit doesn't necessarily translate into cash and cash flow when you're getting started. So I don't want to just throw you off the deep end. Um, Basically, you need to decide today to make cash flow a priority and a regular part of your business. You can basically go really fancy. You can basically have like an accounting program. You can have a spreadsheet. You can have old school pencil and paper. Anything is better than nothing. So basically planning and controlling it and checking it is really important. You can use your computer. You can basically get QuickBooks Pro or a comparable program that really helps you to like supercharge tracking these type of things. Um, Making entries daily is very important, especially when you're talking about payables and receivables. Creating a cash flow report shows the cash you have on hand, any inflows, any cash disbursements, any bank account balances. You want to basically check your actual daily cash balance. Don't manage it from bank statements because that's basically like dated. That comes from like previous history. It's not real time, it's not up to date. You want to recognize any potential problems that you have with your cash flow and create some strategies to really amp up your cash flow. We'll talk about some of those strategies. But it's basic common sense in terms of cash flow. It's not extremely difficult in terms of some of the financial aspects. So in terms of tools that you can use, um, you basically going to use financial statements. There's income statements, there's balance sheets, there's cash flow statements. These are all different statements you can use. I will have Gabby put in the chat. We have a really, really good webinar that was focused on financial statements. So it does walk you through some of these individual statements, like income statements, profit and loss, those type of things. So we will get a deeper dive on that. This is an example of an income statement. Shows you basically net income, shows you kind of like the different expenses and revenues. This is an example of a balance sheet and kind of how a balance sheet looks. And this is a statement of cash flow. So this shows you basically cash flow from operating activities, cash flow from investing, cash flow from finance activities. So it shows you basically cash at the end of the year. You can update this on a monthly basis. So it could be cash at the end of the month. Or you can do it on a yearly basis, like however you want to work it. And I did mention basically we will put in the chat a link to a webinar that kind of does a deeper dive in some of these financial statements. But I do want to mention cash flow statement is not the same as an income statement. Um, when you're talking about a cash flow statement for a startup business, it basically identifies how much cash is needed until the business can support itself. If you're an established business, you've been around like 2 to 3 years, you have some sales, a cash flow statement identifies any gaps in creating those cash shortages, and also helps you to build those cash reserves. So there's kind of like two different things based on the stage of your business. I did put up here two templates. One is from SCORE, is a cash flow template. The other one is how to understand cash flow statements. This was from the SBA website, so you can basically look at those on your own time. And then we do have some recommendations in terms of ways that you can increase your cash reserves. Did break it down into some of the functions of the business, some of the operational side. So number one for sales and managing growth. Um, no brainer, sales can fuel your cash flow. When you have growth, that's going to help both your profit and loss and your balance sheet. One of the things you can do is really look at your cost centers and what's generating sales for you to maintain or improve any ratios and basically increase your cash availability. Cash generators on the sales and growth side can be having less shorter, less costly distribution channels, increasing prices where you can if you don't have any competition, um, having new technology that can reduce your sales costs. Those are all things that can basically increase your sales and lower costs that you have to pay out. It would mention be mindful of anybody who just says sell more, get your customers to pay more. That'll address your cash flow problems. You really need to address the fundamental problems with your bottom line figures, with your ratios, so that you can really set your business up for success. In terms of gross margins, there are ways that you can get cash generators on your gross margin side. That's seek an increase in your percentage of your gross margin. You can improve your quantity discounts. People that buy a lot from you, you can basically give some discounts so that they buy more. Get long-term contracts with fewer, better qualified suppliers. You could redesign your your products, reducing costs. Obviously, you can, um, try to look for some suppliers where you could subcontract low skill elements to lower cost suppliers, or you could improve your asset productivity. So there's a couple ways you can improve your gross margin, mostly on the supplier side, or on the product side. On the operating cost side, really watch your overhead costs. You can watch your rent, your utilities. You can watch some of those fixed costs that you have. Always negotiate on price. Be very careful to give credit, and then have a very aggressive collections to make sure that you're reducing that time that you're receiving payment. That'll help also improve the cash flow. And I would say accounts payable, accounts receivable, those are the two aspects of many businesses that have trouble, where they're very slow in terms of paying, and they're basically very slow in terms of like getting collecting payments. So if you do kind of speed up those cycles a little bit, that does help your cash flow. On the accounts receivable side, you can analyze your credit, whether that's through Dun& Bradstreet or another organization. Um, Basically, like update your invoices. Look at it as more like a marketing piece. You want to make it easier for your client to understand the invoices and to pay you. So there's no like miscommunication. There's something that they're not missing. Even if it is like when you have an invoice where you put their purchase order on it, you kind of like make it easier for them to turn around a payment to you. Really kind of focus on that because that does help your collections. On your terms and conditions, sending your invoice when you're delivering something, spreading any collections over the month, and then considering discounts for those people that do give you prompt payments. That's an incentive for them to like keep paying you on time. Additionally, on accounts receivable, really like we talked about those collections, kind of reducing those days outstanding. Know the chain of approval for the payment for each customer. Maybe they're not the person that makes the decisions, so you do have to like work your way up the chain. So know about that. You really need to think through if you have really delinquent customers, are they still treated as valued clients? Is there a sense of urgency with them paying you? And is there a sense of urgency with your team in terms of doing collections? And then you can always consider factoring. Things have changed a little bit, so that could be an option. Regarding your inventories, um, the cash generators on the inventory side is we all think about that where you have like huge storerooms or you have like a storage unit or in your space you have like a lot of inventory that's just backing up. You could sell off any slow moving inventories. You could basically secure that inventory. You can manage it better in terms of like doing just in time contracts so that you're not having stuff sitting there for a long period of time. And also just keeping as little inventory as possible. That does help in terms of like receivables and your operations. Basically keeping just enough that you need and then basically selling that and then buying more that will help reduce costs. For accounts payable, negotiating volume discounts, negotiating credit terms where you can get it. If you have a business credit card, utilizing that also that helps your business because you can get those rewards that can accrue, and then bartering if you can. And then lucky number 7 is focused on capital expenditures, cash generators for capital expenditures is focused a lot on like leasing and assets. Basically, assets that increase in value, no brainer, are a good thing. Rent or like equipment that decrease in value, that depreciate, those are less attractive. So things that you can lease include furniture, vehicles, telephone copier, cash registers, any industry-specific equipment that you have, computers, printers, ATMs. Those are all things that can be leased. So then you're not on the hook for those things depreciating. Things that you could do that is going to help your business is real estate. Real estate doesn't depreciate. Real estate always maintains that, or like here in Miami right now, goes up. So if you do get in a position where you can buy your shop or buy your space, those are the type of things that are worth it. Basically for equipment, does depreciate and break down over time. And then since you guys have been good about being here, we do have some additional resources we can share with you. I did include up here, it was very popular from the previous webinar that we did on just recipes and doing recipe costing. There is a good template that was available. Also regarding cash flow, costing, and pricing, there was another good webinar from the SBDC out in Orange County. So I did include a link to that. And then I also did include some information on how to calculate gross profit and also put in there information on the SBA webinars. And did want to save some time for some questions or for some chat. But before I wrap up, would encourage you check out our website, check out our YouTube. We do upload videos and other topics there as well. We also include a lot of other information that might be helpful to your business. So I would encourage you to check that out. And then I'm going to look at the chat to see if there's any other questions or information. Don't see anything. So We will be sending you a copy of this presentation. We also will send you a recording of the video as well. So really hope this information was helpful, and definitely appreciate you taking the time. And then just be on the lookout because I know we have some additional webinars this week as well. So have a great holiday. Take care.